I have both built and bought multi-million dollar businesses, and today I'm going to teach you exactly how to do the same. We don't want the staff to know that John is thinking about selling his business. They come straight to you before they go to a business broker and list their business. What's going on, guys? Welcome back. Today we're going to be talking about how to find off-market deals for your M&A project or business acquisition. If you don't know me, my name's Dimitri. I have both built and bought multi-million dollar businesses, and today I'm going to teach you exactly how to do the same. If you haven't already, go and watch all the other content, like, subscribe, and comment. Now, how do we find off-market deals, and why would we even want to specifically look for off-market deals? Now, the most important thing to understand is off-market deals almost always yield better terms. What is an off-market deal? It's a deal where you reach out directly to the owner of a business and ask them if they want to sell and buy their business, as opposed to finding a business that is openly for sale, whether that's a business that has distributed its investment memorandum privately, so it's technically still an off-market deal, or a deal that is publicly advertised. Generally, when you're speaking to someone in an off-market deal context, these business owners, perhaps they haven't done a deal before, they haven't sold a business before, they haven't prepared and dressed up the business for sale, they haven't brought on advisors or investment bankers to prepare that business and to help them sell. And because of all these things, we get far better terms. We have a better relationship, closer relationship to the seller themselves, which means we better understand what they want. There's less competition because the deal isn't being publicly advertised, so you're not bidding against other buyers. And again, sellers are generally just a little bit more flexible in this context. So how do we find these off-market deals? Number one is, let's bring up our notebook here. Number one is we first want to understand our market, okay? You need to have a very, very clear picture of the investment or the criteria of the businesses that you want to invest in, okay? So then you can build a shortlist. This should be in the hundreds of businesses, okay? This is a numbers game. You have to reach out to many, many different businesses. From there, we search online and we try and get the contact details of the owner or the business themselves, and then we cold call. Now, once we get the business owner's contact details, it's super easy because we can get in touch directly with the business owner. Effectively, what we want to ask them is, first you want to tell them we're building a network of businesses in your industry, whatever industry that is, and looking to grow the network. Have you ever considered selling, retiring, or partnering with a group like ours? That's it. And then the conversation starts. We keep it real simple. That's pretty much how I open up all of my calls. That's once we get on the phone with the seller. Now, if you can't get on the phone with the seller, if you're calling the business's reception, then you have to go through what is called a gatekeeper. The gatekeeper is the lovely lady that doesn't want to let any old random person who's selling something speak to the owner themselves. So there's a couple of different ways to approach this. One way is to say, hey, I own another business in this industry and I wanted to speak to the owner about a potential collaboration or partnership. You can try, I'm investing in businesses just like yours, and so I wanted to speak to the owner about it. My personal favorite, and what we do, is I call the receptionist and I say, hello, Miss Receptionist, how are you doing? Can I speak to John? And then they'll say, yeah, what's it regarding? Then I say, I actually own similar business XYZ industry, or I'm looking at getting into XYZ industry or whatever it might be. John doesn't actually know who I am. Just to be clear, this is not a sales call. I'm not selling anything, but I need to speak to him regarding a private matter. And then she'll say, okay, but I can't put you on the phone. You don't tell me what it is. And then you say, yeah, look, I'm really sorry, it's confidential. Would you mind just asking John to call me back? And yeah, just take a message. It's a private matter from Dimitri. Here's my number. I'll ask John to call me back. When John sees that someone called about a private matter, like 80% of the time, which is a massive phone callback rate, which is like a great hit back rate, John calls back. So that's my personal favorite. And that's our main one is the private matter. And that's because also, and I should have mentioned, we generally don't like telling the staff within the business that their business is for sale. If the receptionist catches wind that Dimitri is calling about asking to buy the business, not a problem. But then if Dimitri speaks to John, and then the conversation goes quiet in terms of between John and the receptionist, because of course John isn't going to want to tell all of his staff that he's thinking about selling or that he's negotiating a deal, because then their job is at risk potentially, or in their minds there's a potential risk of them losing their jobs. And then Dimitri over time keeps calling, and Dimitri and John keep having conversations, and the receptionist doesn't know. Her mind is just going to go to the worst thing, and then it's going to go through the company. So we don't want the staff to know that John is thinking about selling his business. The first time we reach out, yeah, it's kind of okay, but that's why I prefer to going, hey, this is a confidential matter. And then John gets curious when he sees that note and inevitably calls back. That's worked very well for us. It might just be the industry that we're in, but that's how we go about doing it. So that's our initial sort of phone pitch. And you want to have a script written out for your industry in particular. If you do own a business already in that industry, it's way easier because you can say, hey, I'm the owner of XYZ business, and I just wanted to chat to you because, we're basically neighbors, we're working in the same industry. It's way easier to get through to the owner. Now, the other method to get off-market deals is networking and referrals. So this includes business brokers, right? And accountants. You want to ask your advisory firms to look out for deals for you, because they're working on your accounting, and your legal firms because they're working on these deals all the time, and they should be referring it to you. Any accountants, because accountants are always constantly valuing businesses, attorneys, industry peers, anyone else that is basically working in your industry. You need people to know that you're buying businesses, so that when they're thinking of selling, or they find or hear of someone that's thinking of selling, they come straight to you before they go to a business broker and list their business. This gets easier as you acquire more and more businesses, because then people start to associate you with somewhat of a deal maker, and then people are going to just start naturally coming to you, and the deals get easier. The other thing is conferences and trade shows. We actually sponsored a trade show middle of last year. That worked really, really great for us. And we just had a big banner that said, have you thought about selling your business? And people come to us and we get deals that way. Local business meetups, and my personal favorite, events. So we haven't done the in-person ones yet. We do plan to do, there's like afternoon tea, Q&A sessions, whatever. But we have hosted webinars, and that worked fantastically well for us. If you're buying manufacturing businesses, for example, you can host webinars that are just about how to grow this type of manufacturing business, or any other value-oriented content, and then people will get to know you. They'll start to trust you, and then at the end, you just say, of every content piece, you just say, or online event or whatever it is, if you're thinking about selling, come and speak to me, because I'm looking at buying these types of businesses. Then the other one is brokers, but you want to know the broker, and you want the broker to bring you the deal before they start advertising it. That's super, super important, because once the deal is advertised, and any advertised deals are generally just rubbish. And then when you are looking for brokers, you want to find brokers that are specialized in a specific industry, as opposed to generalized brokers. The specialized guys have better industry insight. They're, your leads are targeted, and there's a higher chance of actually getting a match with them. However, sometimes they have higher fees or a smaller buyer pool if they're specialized. But yeah, much better than the generalist guys. Then once we've dabbled in all of these things, we want to build what's called a deal funnel or a deal pipeline. Whenever you speak to any bank, private equity firm, whoever you're speaking to, even your accountants and lawyers, and you say, hey, I'm executing on a roll-up, one of the questions everyone is going to ask is, how's your pipeline look, or how does your funnel look? Your pipeline is effectively the customer journey, or the journey for a seller, from the point you first reach out to them, getting them all the way through to coming to a deal. You want to keep filling that pipeline or funnel at the beginning by doing all of these things that we've talked about. Okay? Making sure that people get into your funnel, collect their financials, and then they go through the stages of a deal, which we did talk about in another video, and I suggest you go and watch that. So that is how we effectively find off-market deals for business acquisitions. Once we do find them, like I said, we want to put them into a funnel. A really good way to manage them, and you're going to be doing a lot of this, is to have a CRM set up specifically for, so we use a CRM called Close that's set up specifically for our acquisitions. It's separate to the other CRM that your business would usually use. And that is just to manage the relationships and note take. I mean, with us in the clinics that we're buying, we're speaking to dozens and dozens of clinics at a time. And so all of this is managed in a CRM where we've got notes of every single conversation. And because there are multiple people involved in each deal, we've got my internal finance guy, we've got my personal assistant that does a lot of the follow-ups and things like that. We've got myself, of course. And so we need people to be effectively taking notes and updating each other by using the CRM as to the deal stage. And then we set reminders to follow up and stuff so that they don't slip through our fingers effectively. If we don't have a CRM and we're trying to do deals, it's like having a leaky bucket. A lot of the water just leaks out of the sides. So we want to make sure that we effectively managing all of this with solid follow-up cadences and emailing, phoning and whatnot. So that is how we build a funnel, a deal funnel, and of course, find off-market deals. If you have any questions, let me know. Like, comment, subscribe, and I will see you all in the next video.